This is a short introduction to financial accounting. We'll look at what accounting is and what accounting information is prepared. We will also consider the different types of business entities that you can be asked to deal with and also the different users of the financial statements. Now, there are basically two things involved in financial accounting. The one is recording. Every time you make a business transaction, you need to make a record of that transaction. Any business would be buying goods or selling goods. Lots of transactions every day. Every transaction does need a record. And the second thing is summarizing to the end of the accounting period or the end of the year. We are required to produce restatements. For instance, statement of profit and loss account, we're showing how much profit a business has made. On that statement, we want to show total sales and total purchases. We are not going to list every single sale. They are going to be thousands of serials we will record every time we sold goods. But at the end of the year, we need to summarize it, total of what we saw and total of what we bought. And so on. Two main types of business entities that you need to be aware of. The one is sole trader. That is one person in business on their own. So, there's nothing stopping me to rent a store in the market and buying and selling goods. And of course, I hope to make a profit, and that profit would be a lot to me. But if the business collapses, it's me going to pay the bills. I am personally responsible for everything business does, and I am personally responsible for everything. Business loss. That means the owner has unlimited liability, and other type of company is the limited liability company. And here, several people in business together. But the important thing about the limited liability companies, that business exists separately from its owners. So it exists separately. Any profit derived belongs to the owners by it. The most important thing here is that the owners have limited liability. Well, it means that if the company collapses or it can't pay its bills, as an owner this time, I'm not responsible. Users of the accounting information. Users of the account information here means the users of the financial statements that we prepare at the end of the accounting period. Many people are interested in the financial statements, obviously the management. Their job is to run the business and hopefully to make a profit. And I think obviously the owners and the shareholders, I'm interested in how much profit my business is making. I'm interested in what my business is worth. Potential investors. If you are thinking of putting money into my business, I think you will want to know how well my business is doing. Lenders. If I go to the bank to borrow money, and the bank obviously would want to know first how well or badly the business is doing. Employees. Wherever you work, if the business is making lots of money, you will be hoping you are going to get a pay rise. If the business losing money, you might lose your job. And the government for several reasons, but mainly, of course, they are interested because they are going to get that from you and the general public. They are interested in certain companies, whether they are doing well or ugly. Well, in this paper, we are mainly concerned about the financial accounting, but do we know about the main difference between the financial accounting and management accounting? What management accounts are accounts that are fully prepared mentally for the purpose of the management. Accounting is to have the managers to run the business. Whereas in financial accounts, the state requires accounts once a year to give information to those users I mentioned on the previous page. They are required by law once a year. The management accounts are not required by law, whereas the financial accounts, they are required by law. There are laws about what the financial statements must look like. We call it international accounting, financial reporting standards. Again, the layout is required by law in the financial accounting. Well, in management accounting, there are no rules. It's whatever layout we find useful. Thanks for watching. If you like this video, please don't forget to like, subscribe, and also press the bell icon for future updates. See you in a new video. Take care and Allah Hafiz.